Hello, everyone. Welcome to another episode of Stable School Podcast. And today I'm with Cyrille from FX Protocol. Cyrille, welcome.
Hey, thank you. Thanks for having me.
Please introduce yourself and tell us a little bit about FX Protocol.
Yeah, sure. So I'm Cyrille. I'm a contributor to AladdinDAO. AladdinDAO is the DAO behind FX Protocol and other protocols such as Concentrator and Clever. And FX is some kind of new way to take leverage on ETH and BTC with very high capital efficiency, minimal liquidation risk, and zero interest. So it's no borrowing cost, no funding cost, just a one-time opening and closing fee. And it's powered by a decentralized stablecoin, which is called FXUSD, that has on-chain, sustainable, organic yields, basically.
Yeah, and we'll dive into that because where does the yield come from is the meme nowadays.
Yeah, that's a good question to ask.
Yeah.
Especially considering all the weird stuff happening around.
For sure. Maybe we can start with like the basic mechanism of FXUSD, if you could explain that.
Yeah, of course. I think an easy way to see how it works is to look at the CDP model. If you're familiar with how Maker works, for instance, it's pretty worked in the first place, for instance. It's pretty similar. So you pledge collateral and you can create debt, like mint a stablecoin against your collateral. So the stablecoin is fully collateralized. But we abstracted a thing and other protocols on CDP built some kind of leverage tools to get leverage along your collateral, for instance. And we abstracted it for the users. So the way the protocol works is that you can come with any kind of asset, whether it's stable or ETH or BTC or whatever. And the protocol will give you overexposure to ETH or BTC by leverage looping your position through the minting the stablecoin.
And so that's the mechanism behind like where the yield comes from. Like how frequent is that? Like, is the yield how is the yield distributed? And
oh yeah, sure. So that's I mostly told you about the leverage part. So this is called expositions, and as I told you in the introduction, there's no borrowing cost. It's just a one-time minting fee and closing fee when you close your leverage positions. Mm-hmm. And these fees are distributed to the stable strategy called the stability pool. The stability pool actually harness two main fee generated. So the opening and closing fees of the leverage positions and the collateral's yields, because ETH positions, for instance, are only backed by wrapped staked ETH that generates something like 3% APR, and most of this yield goes to the stable strategy. So when you stake FXUSD into the stability pool, you can also stake USDC, by the way. When you stake stables into the stability pool, you can opt for real yield, which is made of wrapped staked ETH and wrapped Bitcoin converted into wrapped staked ETH. Or you can choose to get FXN emissions, which is our governance token, if you'd rather accumulate the governance token. So yeah, this is how the yield is generated. So most of the yield is organic, but if you'd rather get emissions, you can opt for the emissions.
Gotcha. So that's if you want to be more on the riskier side, so to say.
Kind of, I don't know, it's just maybe a different risk profile, but many people are bullish on the token because it's very scarce and it's a revenue sharing token as well. So
it's actually so if you hold the token, you earn in the revenues of the protocol.
If you stake the token, you can earn the revenues of the protocol. So most of the revenues goes to the stability pool, but some also goes to the token. Nice. And since the token holders lockers can direct future emissions as well, they also get income from this. So it's the token is also attractive. Something like 11 million market cap, while the protocol is 60 million TVL.
Wow!
And it generates something around 30% APR.
Whoa!
So it's some people accumulate it, especially considering the current market conditions. It's a good NFA. Obviously.
No, of course, no financial.
And I'm biased. I'm totally biased. I want to tell you, I am biased.
No, of course. I think that. These are just like stats. This is observing. Yeah, this is what's happening, right?
Yeah.
But it's very interesting. And I do want to have your opinion on a certain take. But
sure.
I think that I heard you say it already. But what makes FX protocol or FXUSD, let's say, different from like a mechanism point of view of like a more baseline CDP or like?
Sure. That's a very good question. There's I'd say three main differences from a regular CDP. And the first one is that it's zero interest loans. So on a CDP, you will pay a borrowing cost most of the time, and it can fluctuate over time and make your position very costly. And this is the first thing. The second thing is there's a liquidation protection mechanism on the leverage side that prevents you from getting a hard liquidation. And I can dive a little deeper.
Is it like soft liquidation, like curve, or
same, but different?
Okay, cool.
Yeah, it's a slightly different mechanism. It works differently, but it prevents you from getting any hard liquidation mostly. Sure. I will explain maybe a bit later. And the other point is we have a very strong peg keeping mechanism that makes FXUSD very reliable peg-wise while being decentralized. Because our mission is to bring a new decentralized stablecoin into like the top 5 stablecoins. And this is only achieved by having a great capital efficiency and perfect peg. Because when you get exposure to a stablecoin, you want to make sure it would stay stable, right? So that's
a bunch of questions, but maybe first like something like to have your take.
Yeah.
I mean, 30% APR, pretty good. Very good.
This is on the governance token.
On the governance token, sure.
Yeah.
But I think that generally speaking, how do you view the stablecoin space right now with all the noise?
How I view it?
Yeah, how do you view it? Like
first, it's at ETH, something like $250 billion right now.
Yeah.
So this is great, but it's mostly centralized stablecoins. Yeah. Like only 0.3% are decentralized. All the rest has centralized exposure somehow. And most of the new stablecoins projects are either black boxes or real world asset projects. There's a simple reason for that, because it's very easy to have a scalable stablecoin when being backed by the most liquid assets and tokenizing them. And it's very profitable as well, because you only redistribute part of the yield you generate in the backend, and that's easy. But at some point, if there's only centralized stablecoin around, then users won't have the choice anymore of decentralization and the freedom that comes with decentralization, censorship resistance, and stuff like that. So this is why it's a very important mission we have to bring and sustain a decentralized stablecoin. It's just not the choice for the DeFi users to actually get, in my opinion, lower risks, because when there's no human factor involved into an asset, no human execution risk, it's lower risk. It's only smart contracts. FX smart contracts have been audited 12 times. There's another audit being conducted at the moment. And with similar, if not better, rewards than the centralized stablecoins.
Yeah, so, which is why I was fixating about 30%. I mean, there's sure like ranges, and there's different. That's for governance staking on the governance. Yeah, if you would have for the stablecoin. Side tangent. Why is it called FX protocol?
I actually have no idea.
Okay, cool.
Yeah.
It's like, because intuitively I thought like, this has to do with different currencies maybe.
No, there's nothing to do with
maybe it's with X position, because I see it's a team brackets.
Yeah, we use the X for the leverage side, because there's the leverage side and stable side, and the X represents the leverage side, it's like multiplying.
Gotcha.
And the F is the stable side. But I joined the project after it was launched, so I actually don't exactly know why it's called FX.
Cool. Was this
probably a math
next episode? Yeah, we'll get to that for the next episode. Yeah. So can you like double click for me on how do you define what is a decentralized stablecoin?
Yeah, in my opinion, first, everything should happen on chain. And then that's the first point. There's obviously a whole scope of decentralization, and the most so first it must be like 100% on chain and only smart contracts operating the stablecoin, and then the collaterals should be decentralized as well. So currently, FXUSD is mostly backed by FXUSD. It's also backed by Wrapped Bitcoin, which is obviously less decentralized than Wrapped Stake E, for instance, because it's like I'm looking for my word. on BitGo custody. Yeah, that's what I was looking for. Custody is good. But it's the most liquid Bitcoin wrapper so far. But we aim to slightly move to a more decentralized Bitcoin wrapper at some point.
So, in the landscape of decentralized stablecoins, you said only 0.1% or 0.3% is right now, let's say, classified decentralized stablecoin. How is FXUSD different from other decentralized stablecoins?
Most from the other decentralized stablecoins. I think in the model for the first place, like the way FXUSD is more capital efficient in the first place, because it can reach up to 95% LTV, which is pretty much unseen on Ethereum mainnet. Yeah. And so it's more capital efficient, and the peg keeping mechanism makes it very, very like resilient and well pegged.
Yeah.
Anyway. Okay. So, and then when I said like most stablecoins around are centralized, because they most of the time have exposure to USDC, for instance, or T-bills.
Gotcha. So you mentioned like 60 million right now is the TVL across chains?
Yeah, the protocol's TVL excluding the LPs, because since we have these gauge mechanisms, we also have LPs with FXUSD that the protocol incentivizes. If you account for the LPs, it should be a little above 100 million.
100 million, okay, yeah. Wow. And so what's the growth been for you? Like, when did FX protocol start? And
the first iteration of FX was launched in August 23, but the current version, which is V2, was launched early January. So it's been growing pretty well, especially considering that the growth is entitled to leverage demand in a way, because FXUSD is minted when people leverage their ETH or BTC, and the current market conditions are very in favor of taking leverage. But despite that, the protocol has been growing pretty well, and we launched FX Save, which is the tokenized iteration of the stability pool, only 3 weeks ago, and it grew up to $23 million very, very quickly in just 3 weeks, because it generates organic yield, and it's currently some of the best yields on Ethereum for a yield-bearing stablecoin.
Yeah.
So I'm very optimistic on what's going to be once people are going to start leveraging again.
Yeah. So if you look at the go-to-market strategy for FX protocol, today you had multiple guests when we were talking about it, and like everyone is positioning it in a certain way. Who are you targeting, or is it just build? Yeah, what is the go-to-market for FX protocol?
Yeah, we're in the first place, we needed to bootstrap some stable liquidity, because it's like it enables a good UX for people who want to leverage their ETH and Bitcoin. But now that we have some pretty steady, stable strategy, FXSave being around, listed on the Morpho, listed on Pendle, and performing pretty well as well. Now we're mostly focusing on DeFi users that want to leverage their ETH and BTC without having to worry about, because when you take leverage, it can be very stressful, because you can be like, so at some point your leverage may be very, very expensive. Funding costs, for instance, when the market is bullish, can reach 80% annualized, 100% annualized. You don't have to worry about this on FOX. And also, there's the liquidation worry. So sometimes whether you want to trade or just be more capital efficient on your ETH or Bitcoin stack, you may not time the market perfectly, right? And maybe the market is going to decrease right after you open your position, and you may get liquidated. And the idea with FX protocol is that it won't be as painful or as using another leverage protocol, whether it's a money market or a per protocol, because thanks to the liquidation break mechanism.
Gotcha. So, but do you do active marketing for it, or is it like organic?
We're a small DAO, and we're like mostly tech-oriented people, but we're getting more and more around to talk about the protocol, just like today, for instance, with you. And so we're doing mostly active marketing, going to events and and attending to spaces, doing co-marketing with other projects and stuff like that. That's mostly it. It's probably important to say that FXUSD, FX protocol, and all AladdinDAO protocols are community funded. There's no VC backing. There's no team allocation on the token. This is a really DeFi aligned in terms of value DAO. So, and this is actually what brought me to AladdinDAO in the first place.
Yeah, I remember you said this to me in Denver 2025, like when we met. Yeah. I was really surprised. I actually looked into it, and no VC backing, no team allocation.
No. Yeah.
And so I asked you the question about decentralization purpose. I would say that, you know, decentralization goes like further. It's also governance. And I look at the design of FX protocol. I mean, kudos to you guys. I really think that it's very cool to see that across, like, even how you guys pick the chain base. Like, it was really it came from the community. You know, it was voted. I think that often you see protocols die on their own, sort of die because of a principle. But somehow you guys made it work.
Yeah, so far it's only on Ethereum mainnet, but you're right. We're about to release the protocol on Base, and this is because the community asked for it. We've been in touch with many other layers offering us to deploy there because they need it. They want new protocols to deploy, and they could incentivize and stuff like that. But the community asked for Base, so yeah, we had this governance proposal, and this is going to happen.
Yeah, and so. You spoke about the differentiating elements of FXUSD.
Yeah.
And one of them was the liquidation mechanism. You said it's slightly different than... Could you double click on the liquidation break, I believe it's called?
Yeah, this is how it's called. Yeah, on most money markets or CDPs, when your leverage position reaches a certain threshold, which is called the liquidation LTV, at least half of your position, if not the entire position, will be liquidated. That means closed, and while paying a penalty on the closure, usually between 5 to 10%. And for instance, on Aave, up to 50% of your debt is repaid when you get liquidated. And this can be very painful because most of the time when you get liquidated, it means the market dumped, and you end up selling at the market during a dip while also paying a penalty. So this is very painful. And even some CDPs even liquidate 100% of your debt. So this is very, very, very painful. And on FFX, the difference is that whenever your leverage position crosses the liquidation break LTV, which is 88%, which is actually pretty high to compare with the other liquidation LTVs, it will just repay the tiny portion of your debt to put it back at 88% LTV so that your position never reaches the 95% hard liquidation LTV. If that mechanism for any reason ever fails and your position reaches 95% LTV, then it gets liquidated. But if the liquidation break mechanism works, which it does, except once when we just released the protocol to be transparent, but it's now fixed because we have more and more solvers and even MEV solvers processing the liquidation break. So it's now working very seamlessly. Your hard liquidation price is never reached because it just goes lower and lower so that you're never reach the hard liquidation.
Interesting. So just for my reference, because like how soft liquidation usually works is more like in tranches, in steps. And this instead pegs itself to the 88%, as opposed to like, you know, in tranches liquidating like that position. Yeah, correct.
You could see it as tranches, but like very, very tiny tranches.
Right.
And the way we can achieve this is by doing it on all the eligible positions at once. That means let's say to put your position back at 88% LTV, the liquidator would have to repay $20 of your position. It may not be profitable. So to counter this, the liquidation break is done. It's grouped with all eligible leverage positions called the X positions.
Gotcha. One thing I also wanted to double click on is you mentioned stability pools multiple times, but I actually didn't ask you, like, what is a stability pool?
Yeah, that's a great question because this term is also used by other protocols, but the design is different on the other protocols. So the stability pool is the first peg-keeping mechanism on FX protocol. It's the main stable yield strategy as well. It accepts FXUSD and USDC, so you can stake one or the other. And when you do so, you earn the protocol revenue or the FX emissions. And the stability pool has one main goal, is to arb FXUSD spec. So whenever FXUSD is traded below 0.997 on the main liquidity pool, which is on curve currently against USDC, whenever it's traded below 0.997, the USDC from the stability pool will buy FXUSD to put it back at 1. So that's the main goal. It also acts as a liquidity buffer for liquidators to process the liquidation break and the liquidations if needed. But the liquidators have to bring their own stables. So the stability pool is perfectly USD exposed. It never faces any market exposure. And so this is the first peg keeping mechanism. That if it's not enough, and if FXUSD starts to be traded at that price for too long, so actually, if FXUSD's EMA 42 minutes on curve crosses 0.998, so that means it's starting to be a little too long, the protocol enters what I call the depeg mode. And at that time, people can no longer open any X positions or mint any new FXUSD, preventing new selling pressure on the stablecoin. And all the leverage positions start getting a small funding cost, a small borrowing cost, which is the AAV borrowing costs for USDC. And this funding is directly distributed to the stability pool. So it means whenever it happens, if it ever happens, the stability pool gets a bump in APR of 15 to 20% instantly, organic APR, thus attracting new USDC that will be used to buy FXUSD at the market and push the peg back to 1.
Okay.
And if it's not enough, because you always have to anticipate anything in DeFi, if FXUSD is still depegged, you can buy it to the market and redeem it to the protocol and get wrapped Bitcoin or wrapped staked ETH, like $1 of wrapped Bitcoin or wrapped staked ETH, minus a 0.5% redeeming fee. So the hard floor of FXUSD is 0.995.
So, and just to clarify for anyone who comes in and wants to mint FXUSD, you provide wrap staked ETH, wrap Bitcoin. Can you also do just ETH or?
Yeah, you can come with pretty much anything, but it will be converted either to wrap staked ETH or wrap Bitcoin.
Okay.
But by doing so, currently you get over market leverage exposure on ETH or BTC. But we're about to release what we call FX Mint internally, which is going to be more like a CDP interface that will let you just come with your collateral and mint FXUSD without having to do the looping. So you can get just a spot exposure on Bitcoin or ETH and be able to mint a stablecoin to do whatever you want, either farm, get yield, or redo your bathroom or whatever you want.
So but today, if you want to mint FXUSD, basically you can provide ETH or another asset, but it gets all converted to wrap staked ETH or wrap Bitcoin.
Yeah, it's mostly get it converted to a leverage position. So currently the best way to get FXUSD is to buy it on the market, or you could actually already do the CDP-like model by, let's say you have some ETH and you want some FXUSD, you could get a 2x position, for instance, with half of your ETH. So you keep that same exposure and sell the other half for FXUSD. And then you still ETH delta neutral and you have stable coins. But this is a complex process. This is why FX Mint is going to make it way easier, because you'll be able to just pledge your ETH as collateral, get FXUSD with just a one-time fee, no borrowing cost. So if you're long-term bull on ETH or Bitcoin, you can get a very good capital efficiency because you have a minimal liquidation risk, one-time zero interest loan, and you can get stables to do whatever you want.
Interesting. So FXUSD, mainly on just like right now, it's only on mainnet.
Yeah, correct.
What can you use FXUSD for right now today?
Today, let's be honest, FXUSD is a byproduct of the leverage positions, and its main use is to earn yield. But
that's good enough. I mean, that's the primary use case.
Obviously, and the main difference is that it's organic and sustainable yield. There's no points story in it. There is no token inflation unless you want to accumulate this token. But the FX Save yield, for instance, is made on only the organic yield. So,
does FXUSD have destinations today? Like in Aave or?
Not in Aave yet, hopefully sometime.
Yeah.
But it's listed on Morpho already. We launched the Morpho Vault with RE7 a couple of days ago, and it's about already 2 million USDC supply in it with a good utilization because people are looping FX Save. And it's been listed on Pendle very, very quick. We've been very happy about this launch as well. So people can LP on Pendle and get extra Pendle rewards. But they can also speculate on the future yield or fix their yield on FX Save. And a good thing to understand is that since the stability pool, thus FX Save, makes yield from trading activity, betting on FX Save yield is betting on volatility. And today, when you want to bet on volatility, you can use options, stuff, and complicated stuff, and so on. But now there's a very, very easy way to bet on volatility. It's just to go for the YT on Pendle, because if there's more volatility either way, there's going to be opening and closing of leverage positions on FX that will bring yield to the FX Save, thus having an impact on the YT on Pendle.
Interesting. I think that, at the very least, myself, flabbergasted about FXUSD, mainly because when I dove into it, I truly think that's a novel design. But I think that the way the protocol is operated as well, I actually don't know that many or any like that are operated in this fashion. So it's for me, it was like a very, very interesting, a very, very novel way. And so it's a very cool protocol. Is there anything else, like, to the listeners today, you're saying like, okay, this is what you need to know about FXUSD, or anything exciting that's on the roadmap that you want to like share?
Oh yeah. There's many exciting stuff on the roadmap. There's the base launch, obviously, but we're also working on short positions because so FX Mint that I already teased a little bit, which is coming, and there's the short positions coming as well because today X positions are only longs on ETH or BTC. So short positions are coming, limit orders as well to improve the trading experience for those, because you can get up to 7x leverage on ETH or BTC, and probably more on once on base. So the trading UX is also interesting, and we're working as well on giving better price execution for expositions minters. Working with several aggregators such as Odos, KyberSwap, and Paraswap, and others.
Gotcha. Okay, well, so a lot of exciting integrations.
Yeah, definitely. And also mentioned the base instance. It will probably also let us open the protocol to other collaterals, because we want to stay very conservative on mainnet, because the goal is to have a resilient stablecoin, which is FXUSD. But once launched on base, since there's already a centralization assumption being on base, we can onboard more centralized collaterals and offer like different experience as well.
I know we say we come again, but I just have one question I really like want to ask. When I talk to you, I feel like you guys are very comfortable, as in like you're growing and you're comfortable at the rate you're growing. Whereas sometimes when I talk to protocols, there feels like an existential crisis.
Oh yeah, because
there are a lot of like, maybe it's because they feel like there's a lot of similar players in the pool. I can see how FX protocol is different, but am I understanding that correctly? Am I feeling that correct? Like it feels like we're growing, it's fine, and we're moving ahead. It doesn't feel like no pressure from VCs, no pressure from like, a token launch, like all that stuff.
No, the token is live. There's no pressure on that side. There's no pressure from VC because there's no VCs. And yeah, the protocol is growing. It's innovative. And of course, there's a massive competition on the stablecoin landscape, but not that much on the decentralized one. And I actually wish every other decentralized stablecoin to succeed because it will be a victory for decentralization. So I'm confident because the model the model works. And as soon as people would start leveraging again, we have a clear value proposition on that side, which is unique. And so it's going to grow with the leverage demand as well. So yeah, and the roadmap is great. We have all other stuff coming as well after, but it's going to be the end game, and it's not public yet.
Amazing. Well, so thanks so much for joining me.
It's a pleasure. Thanks for having me. Finally,
we made it.
Yeah.
And I'm actually excited. Like, you should definitely come back. Talk about the next time. I mean, you guys are working on shorts. You said I think that will be the next big thing, to be honest. And
I think so
I'm
too.
super stoked for whatever new proposal comes to the governance and you guys are going to do.
Anytime. It's a pleasure to share with you.
Thank you, Cyrille.
Thank you.